Welcome to the Deep Dive. Today, we're getting into the financial investigations around Donald Trump and his businesses.
Right, specifically looking at the New York Attorney General's work. It's quite a complex area.
It really is. You share this detailed report, and our plan is to unpack the big civil fraud case against the Trump Organization.
And crucially, how that's different from something like, say, insider trading, which the NYAG also investigates, by the way.
Exactly. We'll touch on those other cases, too. Okay, so let's jump in. The Trump Organization civil fraud case, that was AG Letitia James, right?
Yeah. Her office focused on, well, financial integrity using specific New York laws, Section 6312 of the Executive Law, and also the Martin Act.
Okay. And wasn't the trigger for this Michael Cohen's testimony back in 2019 about asset values being misrepresented?
That certainly brought a lot of public attention to it, yeah. It seems to have been a key factor in sparking the formal investigation.
So the lawsuit itself, filed in 2022, it alleged this long-running scheme, like a decade, 2011 to 2021.
That's the time frame, yes. Alleging they fraudulently inflated Donald Trump's net worth year after year on these statements of financial condition, the SFCs.
And the purpose. Why do that?
Well, the allegation was clear: to get better deals, favorable loan terms, cheaper insurance, maybe even tax advantages. Basically, making the company look financially stronger than it was.
The report mentioned something like over 200 instances of false valuations across 11 of those annual statements.
Yeah, it was presented as a pattern. The claim was even that Donald Trump wanted his net worth to go up every single year, specifically.
Let's talk examples. The Trump Tower triplex was a big one, right? Inflated size.
Huge difference alleged. Claiming it was, 30,000 square feet when it was actually just under 11,000. That adds up to hundreds of millions in overvaluation.
Wow. And the report said the controller, McConney, might have known about that size discrepancy way back, like since 1994.
That was part of the evidence presented, yes, suggesting it wasn't just an oversight.
Okay, what else? 40 Wall Street?
Uh-huh. Using their own internal numbers, which were much higher, instead of bank appraisals, allegedly manipulating rates, double counting income, things like that.
And Trump Park Avenue, valuing rent-stabilized units like they were market rate.
Ignoring appraisals again, yeah. It's sort of a theme alleged in the filings.
Mar-a-Lago, too, valued super high based on development potential.
Right, like $739 million.
Yeah.
But the AG argued that development potential was restricted, donated away even, so the actual value was, maybe closer to $75 million.
And key people allegedly knew about these restrictions.
McConney and Weisselberg were named as being aware, yes.
It keeps going. Seven Springs, the golf courses in Aberdeen and Jupiter, that Vornado partnership thing.
Yeah, Seven Springs valued high based on assumptions. Aberdeen on maybe non-existent rights. Jupiter using a disallowed brand premium. Vornado funds misclassified. Even Briarcliff involved Eric Trump's direction, allegedly.
Even licensing deals were included, based on projections.
Speculative ones, yeah. It all painted a picture of, persistent inflation across the board.
So the judge, Engoron, he actually ruled on fraud before the main trial, in a summary judgment.
That's right. A partial summary judgment in September 2023 found fraud had occurred. That set the stage for the bench trial.
And after that trial, which ran from October 23 to January 24,
the final judgment found liability on multiple counts: falsifying records, false financial statements, conspiracy, insurance fraud. The judge used strong language, called the evidence overwhelming.
And the penalties were significant.
Very. Around $364 million in disgorgement that's giving back ill-gotten gains, like loan interest savings and profits from selling certain assets.
Plus bans for Donald Trump, Don Jr., Eric, and restrictions on Weisselberg and McConney.
Yes, officer and director bans, financial control restrictions, an ongoing independent monitor, a new compliance director. Quite comprehensive.
And that total judgment number, with interest, it's now over $454 million, heading towards $500 million.
Easily. It was projected to hit $500 million by early this year because of the daily interest.
But they are appealing this.
They are. They posted a reduced bond, $175 million, back in April 24. Oral arguments were last September, and we're waiting on the appellate decision.
Okay, so that's the civil fraud case. Now, let's clearly distinguish that from insider trading. Completely different concept, right?
Totally different. Insider trading is about the stock market. It's trading securities, stocks, bonds based on important information that the public doesn't have yet.
And you have to have some kind of duty not to trade on that info.
Exactly. You need an insider or someone who misappropriated the info, trading based on material, non-public information, breaching a duty. It's about exploiting secrets for market gains or avoiding losses.
So the Trump Organization case, dealing with asset values for loans and insurance, that wasn't insider trading because it's mostly a private company, not about public stocks.
Precisely. It wasn't about trading securities based on confidential corporate news, but importantly, the NYAG does go after insider trading cases too.
Right, you mentioned that, like the Eastman Kodak CEO investigation.
Yeah, James Continenza. Investigated in 2021 over stock purchases made right before news broke about a potential huge government loan. Classic insider trading allegation. Trading on MMPI.
Material non-public information. Got it.
And there was that CBS settlement involving Les Moonves in 2022.
Oh, yeah, what was that?
A $30.5 million settlement. Part of it involved allegations that the chief communications officer, Gil Schwartz, sold CBS stock based on inside knowledge that sexual assault allegations against Moonves were about to break.
So using inside info to dump stock before bad news hit the share price.
Exactly. Avoiding a loss, which is also illegal insider trading.
And the report also mentions something more recent, a preliminary look into potential trading around a Trump administration tariff announcement.
Yes, that was noted as a preliminary review, looking into whether anyone, maybe Trump or associates, traded ahead of a reciprocal tariff announcement back in April 2025, knowing it would likely impact markets.
Still early stages on that one, though.
Very preliminary, yes. Just signifies ongoing vigilance in that area.
Okay, so wrapping this up, this deep dive shows pretty clearly, I think, that while it's all under the umbrella of financial investigations, the NYAG's case against the Trump Organization was about, well, alleged business fraud, manipulating asset values for loans, insurance, that sort of thing.
Whereas insider trading is specifically about exploiting confidential information in the stock market. Different laws, different conduct.
Right, and the NYAG clearly pursues both types of financial misconduct using the tools available.
Absolutely. It shows the breadth of their mandate to police financial markets and business practices in New York.
The pending appeal in the Trump Organization case and that preliminary tariff review just underscores that financial activities, especially at high levels, remain under scrutiny.
Definitely. It keeps these issues in the spotlight.
It really makes you think about all the nuances in financial law, doesn't it? And how authorities try to ensure accountability. What further questions does this raise for you about how we regulate and enforce these complex financial rules?